Hi everyone, it's Tom here from WB Trading Team, and today I want to talk about margin. Now, it's a question that comes up all the time from the traders that work with us. They're starting to place trades, they're moving to a live account, and they see this number that's appearing when they're placing a deal or order, this margin number. And obviously, it's important, it's linking back to our total account size, but there's not a huge amount of useful information out there on most broker sites about how the margin works and how much do we need to monitor it. So I thought probably a good time to put a video together for this. So I'm going to run through some examples using the broker that I trade with, IG. Everything I cover here will be similar on all brokers, so it's not just a specific IG thing. I'm going to talk about how brokers calculate margin, what margin is, and how we can kind of use our account size effectively with the margin. Margin also ties into our risk management, so it's really vital that we know what's going on here. So with all that being said, let's get started in just a second. Just very quickly before we dive in, if you're still struggling with your trading, or you'd like to know more about how mechanical edges are traded, I've put together a free video course for you that'll map out and explain everything in detail, along with walking you through exactly how the mechanical rules actually work. If you'd like to watch that after this video, I'll pop a link in the description. You can click through and you can watch that straight away. So let's start with having a look at what margin actually is. So the way IG define margin is margin trading gives you full exposure to a market using only a fraction of the capital you normally need. Now, in simpler terms, that basically means you can place larger trades even though you have a smaller account because they will increase your account. That doesn't mean you get any free money off them. It essentially means that they're loaning you some money to place larger trades than you otherwise would be able to with a standard account. Now, to access this, you'll need an account that offers what most brokers term as leveraged products. So something like a spread bet or a CFD account will allow you to access broker margin. A standard share dealing account, for example, that wouldn't. That would just require you to put up your own capital and you could only invest that much. So what you're looking for here is a leveraged account. And we'll come on to this in a second in a little bit more detail, but basically the leverages work as a ratio. The amount you can basically borrow off the broker will increase as your own account size increases as well. Let's have a look now at some examples of margin rates. So I'm going to show on the screen IG's margin rates for a few of the big markets. Most brokers have a similar process, which is they work on a tiered system. So the larger markets will have more favorable margin rates. So as you can see here, we're comparing some fairly large index markets and some currency pairs. And the retail percentage is basically the quote unquote deposit that you would need to put down. You can see that that's inversely proportional to the leverage. So what that's essentially saying is, you only need to put down, if we're using, say, the FTSE 100 as an example, 5% from your account to access the trade. So you can get a 20-to-1 leverage. As we go to more exotic markets, less widely traded markets, that leverage drops, that margin percentage requirement goes up. So in effect, you can place more trades on those larger markets due to margin than you could on smaller markets. And this is really where margin comes into play as being a very useful tool for retail traders. It allows us to place more trades and diversify a bit more because we're not having to allocate our total account to just, one or two trades, for example. We can spread out. Now, that does come with disadvantages, obviously. It leads to sometimes over trading, and that's something that we need to monitor as part of our risk management policy. But it does allow us the option then to place more trades. So let's dig into how margin is calculated on a particular trade. We'll come on to a couple of examples in a second, but the general formula that brokers will use is they'll take your price per point or lot size, they'll times it by the market price level, so the current price of the market, and then they'll times it by this percentage here. So you can see that a couple of factors influence the margin required on a trade. It's the size of your trade, and it's this margin percentage. They're the key ones. So yeah, obviously if you're placing larger trades, you're going to require a larger margin. And if you're placing trades on a more exotic, less widely traded market, you're going to also require a larger margin. Let's see this in a real world example. So I've just got a screenshot here of a trade I've placed recently using GBP USD. and I've set a few parameters here. So my price per point is 1.5, so £1.50. Just put a simple stop of 10 points, a simple limit of 10 points. So what we're doing here to work out the margin, which you hopefully can see in the bottom corner, is £687. We're doing the price per point, £1.50, times the current market price, which you can see on the screen there is 13766.2, and the margin requirement on pound dollar is 3.33%. That all works out to equal the £687.62. So what this means is, as long as I have at least £687.62 in my account of my own money, I can place this trade. Now, it's always advisable to have quite a bit more in. You don't want to run into a margin call, which basically means you've run out of margin and the broker may start closing positions for you if you're very close to the line. But we need to make sure that we're managing the margin effectively as well. And what that means is we don't want to be having a huge amount in our account if we're not going to be utilizing it for effective margin purposes. So let's have a look at another live example here. I'm just going to talk about how we can relate margin to our risk management policy. So I'm just on IG again, and I'm on pound dollar. I'm on my mentoring account, which is just the account that I use to go through examples with traders. So as you can see here, if I drop down the balance, a little over £1,000 in this account. And we're going to talk about how we can relate our risk management policy using the 1% rule to placing a trade and how that affects our margin. So I'm just going to basically place a random trade here. I'm going to go on order tab. I'm going to say, we'll just delete all this so we can start afresh. And let's say when price gets down to 12560, let's buy the market, and we'll put a stop loss in of, let's say, 20 points, and we don't need to worry about a profit target. So if I'm using £1,000 account, we want to work out 1% of our account size. So that's going to be £10. And we know from, if you've watched our previous IG videos, for size, we need to divide the 1% value by the stop loss distance. So this nicely rounded up here, £10, which is our which is our 1% value, divided by our stop loss distance is 0.5. So if I put that in there, you can see that if we place this trade, we're going to lose £10, which is correct based on our risk management. But also the important thing here is that it's going to require a margin of £209.12. So we know, remember on the balance here, I've got just over £1,000 in this account, so I can cover myself on this margin. The important thing I wanted to go through at this point is, if you're placing trades using a correct risk management policy, you should always be well underneath your margin requirements if you're just placing one trade at a time. Now, obviously, if I was to place multiple trades, that margin would creep up and up. So, for example, let's place this limit order here. You can see that it's now open as an order in here. If I just come over to here, you can now see that my margin is increased from £0 to £209, and the available amount I have left to place more trades goes down from the total to 871. It gives me a percentage equity used. So if I was to place that trade again, obviously I could only do it a finite amount of times before I run out of available margin. Where this becomes important, I think, is if you're a trader that's only placing, say, one trade at a time, if you're not looking to place multiple trades, it's not vital, but I encourage you to have a look at what margin requirements you need and therefore how much you need in your account. If I was only placing, I knew I was only going to place one trade at a time and I was always going to use the 1% rule, then do I need all this £1,000 in my account? I only need enough to comfortably cover this number here. So basically, is the dead money sitting in my account that I'm not utilizing? We all want to have, a large account balance. It looks good, for example. And if you're placing multiple trades, it is required. But if you're only going to be placing one trade at a time, I think it's worth considering, is that the best use of your account? Can you take some money out, put it elsewhere, put it to better use, have enough in to comfortably cover the margin? So that's one thing to think about, and I think quite a few traders overlook. But hopefully, as an example, that's given you some input into how margin works on brokers, what we can do to kind of consider it as important, and also how can we manage it effectively. So I'm hoping today's topic, guys, was quite useful. It's something that We touched on quite a bit in our group calls with the traders that join us. This is a topic that I've gone through on a weekly group call with traders in the past. But I think it's important for all traders to know, if you're trading mechanically with us or you're trading any type of strategy, margin's probably going to be an important factor for you. Important to understand how it works, important to see how you can effectively utilize it. As always, guys, thank you very much for watching. Any questions or comments or suggestions for videos, please leave them in the comments below. And I look forward to seeing you on the next video. Thanks, guys, and take care.